Hello students, I am Ronak Bhattacharya. I am delighted to have this opportunity to talk about another crucial aspect of banking. In our previous discussion, we covered the basis of banking, its function, and its role in the economy. Today, we will explore mainly three topics that are directly related to the business and the customer of the business. Number one, business loans. From this portion, we try to understand the different types of loans, the process of obtaining the loans, and calculating the interest on the loans. In our second subtopic, we try to understand the difference between debit cards, ATM cards, and credit cards, and just try to understand the credit card interest computations. And the third half of our today's session, we basically discuss about a nutshell idea on NPAs, that is the non-performing assets of a particular bank. So exploring the performing versus non-performing assets, provision requirements, and at last how the bank calculate the NPS. These topics are basically very essential for everyone who deals with banks, whether you are an entrepreneur seeking the business funding or a customer using banking cards or a financial professional dealing with the bank assets. Let's begin with the first subtopic of today's discussion, that is bank loan. So at first the question arises कि what is a bank loan? Basically, a business loan is a type of financial assistance given by the financial institutions, given by the banks to the entrepreneurs and business to help them grow and sustain their operations. Unlike a personal loan, basically the business loans are specifically designed to meet the commercial needs such as the purchasing equipments, expanding the operations, or managing the daily cash flow limits. So basically, business loan can be classified based on the purpose, based on the collaterals, and based on the repayment durations. So, on the basis of the purpose, there are three types of loans. One is working capital loan, another one is capital expenditure loan, and the third one is expansion loans. On the basis of the collateral securities, the first one is secured loans. Secured loan means the loan backed by an asset, and unsecured loan, that means the particular loan doesn't backed by any kind of assets, and on the basis of the repayment, on the basis of the repayment duration, there are three types of loans. One is short term, that means up to 1 year you have to pay your entire liability within a year, that is short term loan. The second one, you pay more than 1 year but within 5 years, that is mid term loan. And when you pay after the 5 years of loan taken, then the loan is treated as long term loan. Next, we come to the types of business loan. Basically, the banks and the financial institutions, basically the banks and the financial institutions offers various types of loans depending on their borrowers' needs, because it is a primary functions of every commercial banks to issue the loans. So the first type of loan is term loan. So what is term loan? The term loan, basically these are a traditional loan used for a long term investment, such as purchasing the land, purchasing the machinery, or expanding the business, or infrastructural development. They are rapidly in fixed monthly installments over a period of time. The second type of loan is important because the loan is termed as working capital loan. So we all know what is working capital. Basically, current asset termed as working capital. If we talk about net working capital, then we say the amount of current asset over current liability, that is termed as net working capital. Basically, the money of working capital is used to meet up the daily expenses of the business. So that's why sometimes these loans helps the business daily expenses like salaries, rent, inventory purchase, this kind of loan named as working capital loans. The third one is overdraft or cash credit loans. Are flexible loans. It is a flexible loan facility where a business can withdraw more than their available bank balance up to a sanction limit. If business required, then it withdraws, otherwise not. Next type, the loan against property, that is LAP. So business can mortgage their commercial or the personal property to avail the particular loan at a lower interest rate. It is an example of collateral loan. And the fifth one, the government schemes. Nowadays, the various government backed loans like Mundra loans, MSME loans, Startup India loans help the small business and startups to get the funding easily. So, the third question already arising in our mind ki what are the process of obtaining a business loan, because the loan is available for a particular business, but what is the process to avail this loan, what is the process to apply the particular loan. So now we just start the discussion about the process of obtaining a business loan. The first step is determine the loan requirement. At first, you have to understand how much funding is needed, how much funding is needed, and for what purpose. The second thing is select the type of the loan, because just few minutes back we already talked about the various types of loan. So the second thing is required that please choose the particular types of loan. Is it a term loan, or is it working capital loan, or it is a secured loan or unsecured loan? What type of loan that I want to take. The third step is approach a bank or NBFC, non-banking financial institutions. So basically submit an application to a financial institution. And next, the credit evaluation. So what is credit evaluation? After submitting an application to a financial institution, the bank authority basically checks the business credit history and the financial performance and the repayment ability by analyzing the financial statements of the particular company. And after that, the bank authority, if all the things is approved, then the loan amount is transferred to the borrower's account. So by following these 5 steps, you easily obtain a business loan. The first one is determine the loan requirement. The second one, select the loan type. Third one, approach a bank or NBFCs. After approaching the fourth step, the credit evaluation by bank authority, and the last step is loan sanction and disbursement. Now, the another thing already come arise in our mind, कि what are the documents, because just 1 minute before I told कि submit an application of your requirement to the financial institution. So the question is arise कि what are the document is needed for a business loan. So for a bank to approve a particular loan, the borrower must provide the certain documents. The first and the important thing is the business registration documents. That is, your business is registered legally. The second thing is the financial statements of your business. That means the balance sheet of your business, profit and loss statement of your business, tax return of your business, because the bank authority have to check the financial positions and the ability of your repayment by analyzing your financial statements. So that's why you have to submit your all financial statements to the bank. Number 3, the bank statements. The bank statement means the last 6 to 12 months of your business transaction. And number 4, the collateral documents. If you chosen the collateral loans, that means you just backed up any asset on behalf of your bank, and but you just taking the loan on the particular assets, then you just submit the collateral documents. And the next thing is that the security needed of a business loan. If the bank loan can be secured loans, if you opt for a secured loans, then the required collateral such property, that means the gold or any fixed deposits or any land, and these loans have basically a lower rate of interest. And if you opt for unsecured loans, then no collateral is required, but the interest rate are the higher due to increase the risks, because when you have no collateral securities, then bank authority will take the high risk for your loan. So that's why you have to pay a high rate of interest for the particular loan. And next, the important thing, key, how you pay the interest. The interest on a particular cash credit loan is charged only on the amount utilized, not on the full sanction limit. That means the interest equal to, because the first and important thing you must remember, the interest on a cash credit loan is charged on the amount you utilized, not on the full sanction limit. Suppose the full sanction loan limit Suppose the full sanction loan limit is 5 lakh. Suppose the full sanction loan limit is 5 lakh, but you use the amount of 2 lakh and the rate of interest is 12% and usage period is 30 days. Then you just pay the interest on 2 lakh because 2 lakh is your used amount and the rest 3 lakh, that is unused. So always the interest charged on the particular amount that you already utilize. So here as per our example, these three things. One is the loan limit. This is the loan limit. $5 lakh. Used amount used amount 2 lakh. Interest rate 12% per annum and usage period 30 days. So the interest equal to outstanding amount. Outstanding amount means 2 lakh. Outstanding amount into rate of interest that is 12% into days, number of days, that is 30 and divided by 365 because here that is the outstanding period of 30 days. So that's why in the numerator we write 30, and if we mention on the numerator in terms of month, so we must mention the denominator in always the terms of days. If on the numerator we mention in the days, here we mention 30 days, so that's why on the denominator we write 365 days. If I write on the numerator 2 month or 1 month, then I mention on the denominator in terms of month, that is the 12 month. So the answer will be 1973. So this is the sums of our calculation of the interest on cash credits. So this is a basic and very simple sums that we already solved. So now came to the third main topic, that is the banking cards. So what are the cards? So at first we just come to know the types of banking cards. The first type is debit card. So what is debit card? The debit card means it is a card that is linked to a bank account and allows the direct spending from your available balance. Suppose in your account, the account balance is 30,000 and you purchase garments of 5,000 and you swipe your debit cards. That means at that time 5,000 rupees has been debited from your 30,000 account balance and just show a message ki your available balance 25,000. Next, ATM card. ATM card means preliminary used for cash withdrawal from your ATM. That is your ATM card. And the credit card. credit card basically allows the spending up to a pre-approved limit with a repayment option. What is the pre-approved limit? Suppose I hold a credit card of Standard Chartered Banks. Standard Chartered Banks offers me a credit card of 50,000 credit limit. That means I usually purchase within the 50,000 on a particular billing cycle. So what is billing cycle? Billing cycle means, suppose your billing cycle is from second particular second day of a particular month to the first day of the next month. So that means, just take an example, from 2nd February 2025 to 1st March 2025 is my current billing cycle. It's my current billing cycle, and the due date of the particular amount that I already used on the particular billing cycle, that is the 30th of the month, that is the 30th March. So I have to pay all the outstanding amount dues within the 30th March. That I spent the time between from 2nd February to 1st March. And next, the 2nd March to 1st April, this is another billing cycle, and I have to pay the amount that I used from the next billing cycle to on the particular date of 30th April. So on the day 30th April of every month, I pay my outstanding dues, and the billing cycle is just said 2nd February to 1st March, then 2nd March to 1st April, just like this. So how the interest calculate on the credit card? Basically, the credit card charge the interest if the total outstanding balance is not paid by the due date. If sometime I fail to pay my current outstanding within 30th March of 2025, and that time the Standard Chartered Bank just charged a rate of interest on the outstanding dues. This is the interest that the bank charged against the outstanding on a particular credit card, otherwise not. So what is the formula? The formula is that the interest equal to outstanding amount into monthly interest rate into number of days by 30. Why 30? Because the monthly interest rate. Suppose say, just example, outstanding balance, just example 2, it is example 1, this is example 1, and just example 2, the outstanding balance 10,000. Let's take an example. The interest rate 3% per month, not per annum, 3% per month, and the late payment duration 10 days. Late payment duration 10 days. What is 10 days imply? Suppose my payment duration is 30th March. You already say 30th March 33/2025 is the date of payment, and I fail to pay on the particular date. So when I pay on 1, 2, 3, 4, 5, 6, 7, 8th April. 8th April 2025. So that means I pay after the 10 days of the amount payment. So that's why the bank charged a rate of bank charge interest for the 10 days. So the interest amount 10,000 into 3% into 10 days divided by 30. The answer will come rupees 100. So this is the example. Of interest that a bank particularly charged for a credit card if you fail to pay the outstanding amount within the due date, otherwise not. Now we come to the last topic of our today's discussion, that is NPA. NPA is very important thing of a particular bank, that is the non-performing asset. So in today's report, on the basis of non-performing asset, the first place secured within the government banks, that is the State Bank of India, and after State Bank, that is Bank of Baroda. That means the amount of NPS is very low of the particular bank. So what is NPS? NPS means the non-performing assets. So at first, what is performing asset? Performing asset means the borrowers are making regular payment, that is performing asset. And what is non-performing assets? The loan payments have not been made for 90 days or more, that comes under non-performing asset. So then what are the types of non-performing assets and provisioning the requirements? At first, substandard the assets, the NPA or less than 12 months, it is a provision of 15%. Number 2, the doubtful assets, NPA for more than 12 months, it is a provision of 25% to 100%. And the last thing is loss assets, that is non-recoverable loans, is a provision of 100%. So now calculate the calculation of gross and net NPAs. So what is gross NPA and what is net NPA? We just try to calculate using the formulas of NPAs. So gross NPA ratio. Gross NPA ratio. First. So gross NPA equal to total NPAs. Total NPAs divided by total advances. Total advances into 100. And net NPA ratio equal to gross NPA. This is basically formula based. Gross NPA minus provisions, gross NPA minus provisions divided by total advances, divided by total advances into 100. So into 100 means it is in numerator, so it's better to write here. So divided by total advances. So this is our two formula of calculating the gross NPAs and net NPA ratio. So now just take an example. Total advances, example 3. Total advances 100 crore, NPAs 5 crore, provision provisions 2 crore, CROR. 2 crore. Now gross NPA. So gross NPA equal to 5 by 100 into 5, because NPA is 5, total NPA is 5. So 5 into 100 by 100, because 5, the gross NPA is 5, total NPA is 100, and into 100. So that comes 5%. And net NPA equal to the numerator 5 minus 2, because 2 is the provision. So 5 minus 2 into 100 by 100. 5 minus 2 into 100 by the total advances is 100. So that comes 3%. So as per our example, the gross NPA is 5% and net NPA is 3%. So today we cover, in our today's session, we cover the following things. The first thing, we cover the business loans. Under the topic of business loan, the types of business loan, the process of business loan, the documents is required for obtaining a business loan, the securities and the interest calculation for a particular business loan. In the second part, under the banking cards, difference between the debit card, ATM card, credit cards, credit limits, the billing cycle of a particular credit card, and how the bank charge the interest on the credit card outstandings. And next, we just cover the concept of NPAs, their impact on banks, classifications, and the calculation of gross NPAs and both NPAs. Understanding this concept helps you a lot, and thank you for your time, and I just look forward to your questions. Thank you so much.